Can I say a very big thank you on behalf of the NFU to you, Mark, for a very encouraging message within your presentation. You talked about the importance of bond deals, how pleased you were that Greece has had its second rescue package, and also to hear you say that you believe that the UK will grow in GDP terms this quarter. You talked about exports, how exports have delivered a positive contribution over the last 12 months. I just want to point out that we heard this morning from the Secretary of State, Caroline Spellman, how important food exports have been, £11 billion last year. You touched on and you forecast the euro-pound exchange rate. I think the euro to the pound exchange rate has a big impact on farming. We may return to that later. But can I say thank you very much for that sort of very encouraging presentation. Can I now move on and introduce Mr. Sean Roberts, Senior Partner of the European Food and Farming Partnership. Sean needs no introduction to us at the NFU. Sean lives at Market Harbour in Leicestershire and he's been involved in the food and farming industry. It says here for 25 years. You don't look old enough, Sean. You're obviously senior partner in European sort of food and farming, as I said. You've been involved in commodity trading with Bunge and you've been well respected as a chief economist within the National Farmers Union back in the 80s and the 90s. And you've been involved at Cabinet Office and through the Curry Commission. Over to you, Sean, to give your presentation.
Thank you very much, Marek, and good afternoon to everybody. I know I don't look old enough, Marek, but I am going to prove in a second, actually, that I have been here just about 25 years. It's a great privilege to be here. I was at the NFU for 11 years, and funnily enough, it's about 11 years ago that I left the NFU. I still sort of follow everything the NFU does quite closely and have a great affinity with the organisation and still know a lot of people that are involved here. So it's a privilege, and thank you very much for inviting me. Picasso apparently once said that it is your work in life that is the ultimate seduction. If you think about that, I'm not actually sure I think that's true, and I hope it's not probably, but I do feel lucky to have worked for 25 years now in an industry that I really love. My dad, and many people know this, my dad worked most of his life in the dairy industry, all his life in the dairy industry, and my granddad grew up on a family farm in North Wales. So I guess I could sort of claim to have farming in my blood, and I certainly feel passionate about the industry. This session's called the Business Challenge, and I think following on from what Mark's just done, thinking around the wider economy, what I've been asked to do is to look forward and to come down a bit closer to the food and farming industry, and particularly the farming industry, and just to try and give a view of what the next decade may look like for farming. Now, in looking forward, sometimes first it's quite useful to look backwards. So I'm going to start with a short journey, and this is where I'm going to prove the 25 years, Marek, with a short journey into the past. And looking at the performance of agriculture over those 2 decades since I joined the NFU. I then want to try and use that to try and identify the key factors that have influenced profitability in that period, and to ask, are those factors going to change in the years ahead? And finally, I want to think about which of those factors, this is the important bit really, which of those factors can farmers really influence? Consider the role working together has in leading to success, and then just finish with a few case studies of groups of farmers that we work with and food companies that we work with, trying to put some of this sort of talk into practice. But I'm going to start, though, with a short journey into the past. And when I joined the NFU, Margaret Thatcher was still Prime Minister, which is some time ago now. So Simon Gurley was the NFU President, and the NFU's headquarters was at Hyde Park Corner in London. At the start of the last decade, Tony Blair, you'll remember him, looks a bit cheeky there, but Tony Blair had moved into the position as Prime Minister. Ben Gill, I should have had a good photo of Ben as well, but Ben Gill had become NFU President, and the NFU's headquarters was at Shaftesbury Avenue. At the start of this decade, David Cameron became Prime Minister. Peter Kendall was NFU President, and the NFU had moved out of London, out to Stoneleigh. A lot of change in politics and the NFU. 5 Prime Ministers I noticed in that period, and 5 NFU Presidents. I'm not sure if there's any link there. The question I want to ask is, over that same period, what about the industry? How did it perform? And in trying to answer that, I want to start with looking at profit, and then try and think of some of the factors that have driven profit over that period. So if we just go back with me for a minute and look over the last couple of decades and think about profit in the industry, this is the sort of the measure that's used, total income from farming, thinking about profit from the agricultural industry. The 1990s was a bit of a roller coaster ride, really. It started pretty poor, and it ended, I think, even poorer probably, with a big peak in the middle, from less than 2 billion a year in profit up to over 4 billion, almost 5 billion in profit in the middle of the 1990s. I think at the end of that period, the end of the 1990s, was a bit of a dark period probably for agriculture. Lots of issues from BSE, foot and mouth, decline in the pig industry, a lot of issues at the time. But if we move on to the decade after I left the NFU, nothing to do with that I don't think, but really profits for the industry as a whole have moved in one direction. It's not exactly a straight line, but over the following decade, profits have really moved back upwards, again from well under 2 billion up to almost 5 billion over the last few years. Question is this just a cycle that happens in the farming industry? Up, down, up again, and are we about to go back down that cycle again? What are the factors that have sat behind this? Prices, which is pretty much actually where Mark ended up, I think is a key issue here, and one that people talk about a lot. This is an FAO measure looking at global food prices, and basically back in the 90s, global food prices were relatively low. We've all heard the fact that food and raw material prices have been declining, certainly in real terms, for many decades. And other than a sort of weather-powered peak in the mid-1990s, prices were relatively low. From that low point, though, they've really increased fairly consistently through most of the last decade. We often think about 2007 and when we saw the first commodity price peak as being when prices took off in farming. But in fact, if you look at that, you realise that all the way from the low point at the end of the 1990s, prices have been creeping up across the world. And as we've headed into this latest decade, prices are still up there. Globally, overall, just come back a little bit over recent months, but still relative to anything in the last 2 decades at really quite a high level. And it's interesting listening to what Mark has just said, looking at the demand for commodities, if that's where we start the recovery in economic terms coming out across the world, it's an interesting place to be. Move on to subsidy. Looking at subsidy, it was interesting pulling these figures out and just thinking about direct subsidies to the industry and the importance of that to profit. And if we look through the 1990s, the importance of subsidies increased virtually continuously over that period. Now, it's not quite fair at the beginning because there were policy changes going on, the McSharry reforms, when what was price support was being converted into direct support. But then through the mid-1990s, with the devaluation of the pound pushing subsidies up further and direct payments up further, and then in the latter half of the 1990s, where incomes fell back, the proportion of subsidy or direct payment compared to incomes got to a level in 2000 where it was about 150% of the income that farmers were taking out of the industry. Must be an unsustainable situation in anybody's eyes. If we look on over the last decade, though, the opposite really has been true. As we've gone through that decade, so the proportion of subsidy of overall income coming from the industry has declined year in, year out. Now, a lot of that has simply been to do with the fact, really, that incomes have been rising from a very low point at the end of the 90s through that period. But I think if we were to look forward through the next decade, my bet would be, and I'll come back to this a little later, but my bet would be that as a proportion of income, when we get to the end of the next decade, that number will probably be even lower. Both of those things, prices and subsidy, when you're in the UK, are obviously affected by exchange rates. And I think Marig's already mentioned how important exchange rate is to UK agriculture. And in fact, when you have a look at the graph of the, instead of the dollar, but looking at the euro against the pound, and you look at the shape compared to the shape of the profit graph that I showed earlier, there is an uncanny similar picture. Basically, we had a devaluation followed by a strengthening of the pound in the late 90s, and then through the period of the last decade, but certainly over the last few years, a much weaker pound. And I would have to say, of all these big variables, I think probably this, unfortunately, is the main variable. It doesn't affect a lot of other people, say, who are in the euro area, but for UK, the movements in the exchange rate are probably the biggest macro impact there is on the level of income, I think, within the industry. Where we go from here, I suspect there might be a few views come up in questions on that, but undoubtedly this is going to be a critical area moving forward. The last one, in terms of the big macro issues, I just had a look at, was the interest bill. Again, interesting, if you go back to 1990, the industry each year was paying out around £900 million in interest. If we go to the last few years, that interest bill now has fallen to just a little over 150 million a year. So a huge reduction in the interest bill for the industry over that period. Going forward, it'd be kind of easy to look at that and think the line just goes down and there's a trend downwards, but I don't think that probably is the case, in fact. I think the early part of the 1990s was an unusual period with interest rates higher than average, and where we are at the moment is probably an unusual place where interest rates are lower than average. So I think if we're looking through the next decade, that interest bill is likely to creep back up as interest rates rise, back up maybe towards the 400 million mark. So how does all that add up if you look at the outlook for profitability? I think generally now there is a sort of global view that the prospects for agriculture are looking quite good. Higher average prices, at least decade on decade. A lot of people, I think, are now in agreement. If you're looking a decade ahead, then prices are likely to be higher than the last decade. What that doesn't mean, of course, is that prices are going to go up from here or prices are going to go up every year. But decade on decade, higher prices. Rising production to meet, obviously, rising demand that we're seeing across the world, and expanding trade, of which Mark's just sort of talked a little bit about. But on the other hand, though, I think, particularly in the UK, there are some things we have to think about. Input costs have clearly been rising over the last few years, and I'm going to come back to talk about that in a second. We have increased volatility. We have resource constraints that we haven't had to deal with in the past. Exchange rates are the big unknown, and interest rates are likely to be on the rise. So broadly, I think the outlook does look good, and I think broadly, if we're looking at the level of income and profit in the industry in the next decade compared to the last two, it is likely to be higher over the whole decade. But a number of those issues have to be looked at quite carefully. And this really brings me on to try and think about a number of things from the points I've talked about. Which ones can farmers actually influence? It's all right thinking around the big macro changes, what's happening out there in the world, but can farmers do much about it? And what are the things that they really need to be focusing on? Global prices, exchange rates, interest rates, the big things that we talk about in the economy. These have always been important to agricultural incomes and to how the industry is looking. But the influence that individual farmers and even farmers as a whole have on these things is really relatively small. It's something you have to keep an eye on. It's something you have to realize has a big effect. But is there a lot we can do about it? If we think about subsidy, I've already said there, I think if we're looking a decade forward, probably becoming less important in overall terms when looking at where our income's coming from for the industry. And maybe a medium sort of influence there that farmers can have. But if we look at other things, productivity growth, and particularly here thinking about, with rising input costs, the amount of output produced per unit of input, managing volatility, and creating and capturing value in the supply chain, I think it's these things that are likely to become much more important as we move forward over the next decade. And the really good thing is, individual farmers, and certainly farmers collectively, actually have a lot of influence over all these things. What I want to try and do for the rest of my talk is just have a little look in more detail at these three issues: productivity growth, managing volatility, and creating and capturing value in the supply chain. Oil's already been mentioned, and it's funny actually the figure that Mark mentioned of 120, because back in the 1990s, nobody, if you looked at most years in the 1990s, oil on a global level, $20 a barrel, that was pretty much where we were. If we were to say, as Mark's just said, that looking forward over this decade, we might be seeing oil at $120 a barrel, I think most people think, well, that's potentially quite realistic. But that is a massive change in terms of the agricultural industry, because that change in the oil price has an impact on just about every sector in agriculture. Productivity is something that I think is increasingly being looked at. This is work that we've been doing some work with the OECD, and these are numbers from the OECD, trying to look at productivity growth within agriculture. If you look at the bar on the left-hand side, that's looking at developed countries as a whole. And it's not a particularly positive picture, because productivity growth through the last decade, or at least from 2000 to 2007, was probably less than half what it had been in the 1990s. So productivity growth, a big issue for the developed world in terms of growing agriculture. Now, this was a piece of work that the OECD had done, and I said it was at our conference, actually, when we held the conference in the autumn. What I thought would be interesting was to actually look at the UK situation and see exactly what's happened to the UK in terms of productivity. The figures aren't exactly comparable, but broadly, a rather different picture comes out. Now, these now are shifting to volume changes in agriculture rather than financial changes. This is looking at the volume of output, the volume of inputs, and therefore productivity within the sector. And what we saw was through much of the 90s, there wasn't a lot of productivity growth. But towards the end of the 90s, as things got rather difficult, the volume of inputs coming into the industry started to decline quite sharply, and productivity growth started to rise. And that trend has actually continued through most of the last decade. And I think this is a bit of an unsung sort of success story, really, for the UK agricultural industry, where we've actually seen over much of the last 10 or more years productivity growth increasing year in, year out, such that productivity growth in the UK was much better in the last decade than it had been in the 1990s. And I think that's a real strength, potentially, for the UK agricultural industry. It's interesting to think, though, what's actually driving that? I was just showing that the volume there, if you look at the bottom line, the volume of inputs into the industry has been declining through a lot of that period. But what are we actually talking about there? Well, if we take the first one, labour, the labour force in UK agriculture, nobody will be surprised that this has been declining through much of the last 20 years. When I joined the NFU in 1990, there were well over 400,000 in the industry. Now, less than 300,000. But if you look at those lines a little bit more carefully, you realise towards the back end of them that the rate of decline has rather slowed down, particularly for paid labour. So if it's not labour, where are the changes coming from? Now, this is a bit of a spaghetti graph, but once you look over the 2 decades, it does come up with some interesting numbers. Looking at all the other inputs going into agriculture, again, volume, seeds, energy, fertiliser, pesticides, veterinary expenses, and animal feed. And if we look over that period, we discover there's quite a wide spread of what's been going on in terms of volume of inputs coming into the industry. Veterinary, the volume of veterinary services, up by 50%. Pesticides up by 34%, although a lot of that's happened in the last 2 or 3 years as prices have moved upwards. But if we look at the other end of the scale, fertiliser down 45% and energy down 16% over that period. I think in terms of productivity in the food industry, there is what you might even call a revolution that is starting to take place and needs to take place within the food industry. Most people agree that the way productivity works, you have scientific research leading to new technologies, and you get productivity growth in food and in other sectors. But if we stick with food and think about productivity in food, you've got productivity in how we use resources, in how we use labour, and how we use capital. And within resources, we have energy, water, agricultural commodities, and other commodities, metals and the like. But even when you start picking agriculture apart, you've got land, energy, water, and other commodities again. Now, historically, when you were thinking about productivity growth, the focus has tended towards be on labour and capital. If you just think about your own business, probably, and think over the last 2 decades, if you've been in business for the last 2 decades, how many people might have been involved 20 years ago? What area you might have been farming 20 years ago? And the same is certainly true of the food industry. If you went to something like an average flour mill, for instance, and went and looked how many people would have been employed in that 20 years ago compared to today, or the average size of such mills, the focus around productivity has been about driving labour and capital productivity. Whereas the future focus, I think, for the food industry and for farming is going to be much more about resource productivity rather than labour and capital. And that throws up some challenges. R&D, which is often talked about, I think is the main driver. That is the main driver of driving scientific research and new technologies. But there's a difference between trying to improve labour and capital productivity and resource productivity. If you're running a food manufacturing business and you want to reduce your labour force, well, you can do that in your factories. If you want to be able to build a bigger factory and spread your capital over a wider area, yes, you can do that. If you want to actually do something about the productivity of the resources, the oil, for instance, that has gone into your food product that you're trying to sell to the consumer, it is very difficult to do that just in your factory alone. It's something that has to be done across the whole of the supply chain. And I think going forward from here into the next decade, in terms of productivity, this is going to become a really big focus for the food industry and for farming.